Do you ever think, guys, though, that sometimes when you look at what's going on downtown, you look at these markets, you look at the response, many of us here election night, we know how crazy it was, that we're getting ahead of ourselves, and that it puts enormous pressure on the president-elect. He's got to deliver this, and people have such instantly high expectations.
Well, I think one of the problems
that's true.
Yeah, well, one of the problems, I think, listen, what does the market typically try to price in? Inflation as well, right?
Right.
So look at what you have right now. Trump is promising tax cuts, regulatory reform, which is generally positive for economic growth, and a massive infrastructure bill.
All within maybe the first 100 days.
Now, here's the interesting thing. The market digests that as positive, the stock market.
Right.
The bond market, if he really goes through, I think with the infrastructure part, will digest that as negative.
It has already, Charlie.
Suppose it spikes even more. That can
Therein lies
that
a word.
snuff out.
Let me just say.
Here's what I say. I want to get back to reality here, is that when I was a kid in school, I always telegraphed a bad report card to my parents because I didn't want to have them think that I was going to get straight A's. So telegraph some problems, warn some difficulties, let people know about what you're facing. None of that's gotten out. And that all might be good. Now, I like to see people excited. I like to see the bullish spirits out there. Do you worry that people have set things up too high?
Yes. And what you've seen, the leadership in this market are commodities, and that's directly inflationary. People.
So this isn't just a pop-up. This could be something worse.
I think
banks are up.
This could be something worse.
Yes, because interest rates are up, and for once, banks can borrow low.
Are you worried about that, Charlie?
No, this economy has been in shackles for the last 8 years. Once the forces of free markets and capitalism are unleashed, you're going to see a boom in growth like never before.
Democrats come back at that, Charlie, and say, if this is shackles, I mean, this is a bull market, the likes of which we've not seen under a president's 2 terms ever. I don't know if that's true.
But it's not due to President Obama's policies.
Right. You might be right on that, but that be careful, because a lot of people are going to say that's a hard act for President Trump to follow. You say?
No, I agree. If you just look at the stock market, it's a hard act. But if you ask people how they feel about the economy and themselves in the future, they're not happy. There's only a few who are benefiting.
This is based on price earnings. I hate to make it too wonky, but based on.
But we've tried China, so go ahead.
Based on corporate earnings, does that justify Dow 25,000?
Probably not. You've got PEs over 20, and you have inflation coming.
Thank you. One point Charlie has made is that 2/3 of the market's gains since the election are 5 stocks. It's Goldman Sachs, J.P. Morgan, Boeing, I think Bank of America, and Caterpillar, right?
Caterpillar.
Yeah.
Is that right?
So they're about 2/3 of the gains in the Dow.
Stocks, banks, because of higher interest rates and less regulations. So it's kind of focused on certain policies.
Well, it's focused also on commodities. Commodities have.
All right, 1 year from now, will we be higher than where we are now? 1 year from now.
I think we'll be lower. I hate to say it, I'll be in the minority.
Gaspa?
Higher.
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 You'll have to wait and see.
I have to be a contrarian.
All right, that'll do it here, guys. Thank you very much.